What's up, ladies and gentlemen? Welcome to another edition of Dream Firm Spotlight. My name is Tyler S. Clark, co-founder of Dream Firms, where we help you to create your dream accounting firm. And to help you to do just that, we are here to discuss how to price tax returns. More than likely, you're looking back at the tax season you just went through and you said, maybe if I changed the way that I approach pricing, I could make more money, I could get away from people who don't value what I do, and ultimately maybe work a little less during that hectic time of year. And pricing is one of the best ways for you to be able to do that. So during today's call, I am going to be covering a couple of cool things, but one of which is a big piece of data that I really think everyone needs to be aware of. So I'm going to make sure that that piece of data is down below, but there is the NSA, not that NSA. I really think they should change their acronym, but the National Society of Accountants does a survey basically every other year or every year, and they compile a whole bunch of information that I think a lot of you would like to have access to help make informed decisions with what is working. That being said, data is wonderful, but data oftentimes doesn't tell the whole story. There's an old George Carlin quote that sometimes keeps me awake at night, and I think it applies to business as much as it does to life. But George Carlin said, think about how stupid the average person is, and then realize that half of them are dumber than that. Scary, right? A little scary of a thought. But the thing with the information I'm going to show you is they are averages. And if you think about the life of the average tax filer, the average entrepreneurial accountant, generally speaking, it's not that great. And then you think about the ones that are below the average, half below that, and you've got to think they're really struggling. And to get out of that struggle, it almost always has to do with you're not getting paid enough for the service that you render. You're not being appreciated enough. And price and appreciation and value, they're all uniquely linked together. If I were to say, yeah, you can work with me, I'm going to do all this wonderful service and it's $1 to do it, would you be like, oh, this sounds great, I'm really going to appreciate it, I'm really going to do it? Like, no. If I was like, well, actually it's closer to like, 40 grand to work with me, you'd be like, whoa, there's got to be something going on here. What does he have going on? I'm going to appreciate everything he does because I've got to see a return to this. I'm going to make sure I show up to the calls. And the same thing is true for tax returns. So just a little intro on kind of like premium price and data, but I'm going to share my screen really quick because I want to show the average. You guys know I don't like the F word. The average fees, the average price, much easier to say that, for federal tax returns and increases your value from 2007 to 2020, according to the NSA. Okay, so this is interesting to me. Because you got your 706, you got your 709s, you got all the different forms, your 1120 or 1120Ss. And if we just gravitate towards the left side of the screen here, we're going to see our 2020 numbers. Now, this is what is the more commonly utilized pricing strategy. And so I'm going to go through pricing strategies, but I wanted to use this one first as a way to just give you guys a bit of a benchmark. If you're below these numbers and you're looking at this and you're saying, I'm charging only $800 for a 706. You are below the average from 3 years ago. Everyone knows that inflation was like crazy, right? So like pricing tax returns has to keep pace with your cost of life at a bare minimum. So if you're looking at this and you're like, my 706 form, I was, $800. First of all, that was $400 below the average, and you should be above the average 3-4 years ago. Plus, if you were below the average and you're trying to get above it, you got to also factor in this data is 2 years old, almost three years old, really, and it doesn't account for the massive amount of inflation. So I would look at this and take it with a heavy grain of salt. But the reason I start off with this is the more commonly utilized pricing strategy is menu pricing. And so what you're doing is you're going through and you're asking the questions related to what they have going on in their business. You're bringing out your menu, right? Like if you were at a restaurant, right? They're ordering the coconut shrimp, they're ordering the filet, they've got a 706, they've got the 1120S, right? And you're going through and you're adding up the associated cost related to the complexity of the return, right? That's the standard way of doing it. So again, I'm going to drop this resource. It's very easy to Google, but you guys will be able to grab it in the Proactive Accountants Facebook group or in Zoom. But the main thing, again, is just make sure you're above the average. No matter what, you've just got to be like, I am part of the entrepreneurial accounting community that is raising prices, raising appreciation for the service, not lowering it. And, one of the other things that's interesting about averages is we have clients that do just tax services. Okay. Like, it's cool. And when I tell people that their starting price for a tax return, starting price is $1,500, people's like eyes almost like bug out of their heads. Like, how is that possible? Like, I'm struggling to get people to agree to a price of $350. And you've got people who are willing to pay them $1,500 as a starting price. And they have $4,500 and up packages. And for tax work, I just want to be clear. Like, I'm not talking like CFO, fractional. I'm talking, it's a tax return with maybe a little bit of tax planning, right? That's what we're talking about here. And the main reason that they're capable of commanding that price is because they're doing a very specific type of tax work for a very affluent audience. Now, I don't want to blow up their strategy, but if you know that there is a certain type of form that is more complex, state taxes, that's not their strategy, but like, if that was it, right? You'd be like, okay, if I key in on the people who need this type of form or this particular type of schedule, isn't there a good chance that the overall price that I'm able to charge is higher, and then I gain a higher degree of expertise and I get more people who have that specific type of need to come to me? Of course. And so when you think about your price can never be separated from your marketing strategy for who you want to work with. That's what allows you to command a premium price. If you're trying to say, Tyler, I'm on this call to learn about how I can charge a higher price for my average 1040, just like W-2 earner coming in. I'm here to tell you that's a really hard value proposition to make. Now, if they've got some complexity, sure, you can help them out, but there's just a very real price ceiling to that. At a certain point, they go, I'll explore other options, or actually, I think I can just maybe explore one of those online options. And another interesting piece of data that I found is, of course, the IRS gives out some statistics. And one of my research assistants, they said, one of the things I found is that the IRS answered 2 million additional calls this year. And then they were laughing. They said, does that mean that 2 million calls went unanswered the year before and they're trying to celebrate that? I was like, that is exactly what that means. Isn't that crazy? So yes, 2 million people needed help and they didn't get it the year before, but hey, hopefully they got it this year, right? So anyhow, the reason I want to bring up this additional layer of statistics here is because over this I found very interesting, right? The one thing is how many people are actually using tax professionals to fill their returns? And what is the difference from one year to the next? And how many people are self-preparing, and what is the difference from one year to the next? So for the tax professionals, 1 million less. That's not that big, only a 1% change. I would consider that just somewhat of a statistical anomaly. I don't think that's that big of a deal, but over nearly half, a little less than half to be precise. A little less than half of all tax filers used a tax professional. That's a huge segment of the market. I mean, like, that's just so enormous. And so the reason I bring this up is if you're trying to have a hyper successful firm, you do not need even 1% of this. You wouldn't even want 1% of this. If you just get a fraction of this, of the type of people you want in a sector that is willing to pay a premium price for a more complex part of a return, and you can shine your expertise on that, you will have a very, very successful firm, just like our clients of Randy and Deva do. And you can learn about their success story on our website and on our YouTube channel. So again, I just wanted to point that out. I thought that was interesting, just a cool trend. And then let's talk a little bit more about the different strategies. So the only one I've talked about so far is menu pricing, okay? Which is basically, again, find out what they've got going on and then figure out what your price is per return, per extension. And then that's that, right? Simple as that. The second one is by far my least favorite of any pricing strategy out there. I think you all know what it is, and it's hourly. Hourly is saying, look, I'm not sure what you've got or how long it's going to take. In other words, I'm not really sure how proficient I am at my craft or skill. And I'm not sure which questions I need to ask you to figure out what you've got going on. So I'd rather just provide an ambiguous price range sort of area in which you can expect it. I'm going to do the work, create a billing problem on the back end potentially for me where you may ghost me, you may disagree with the bill. It's just the worst of all of the options out there. And just to give a little bit of additional pricing psychology for you, the one thing that entrepreneurs pay for is speed, right? The reason that I am happy to pay, $7 a month for Spotify or whatever it is, instead of downloading music for free online, is speed. Like I like that I can get something done quickly and efficiently, even if it costs a little bit of money. The same thing is true in tax filing, in accounting, in marketing services. It's speed to result. And when you start to recognize you're not pricing based off of your time, you're pricing based off of the value. And value is a synonym for results. How quickly I can generate the result that you're looking for. A pristine tax return that's maximized all of your legal allowable deductions. That's what you're looking for. So if I don't want to be penalized for my ability to be great at something, which is what hourly does. Hourly provides the incentive to go slower, to make more money. Nobody wants to buy that. Just to be super clear, like nobody wants to buy that. And if you are dealing with people who are like, what's your hourly rate? They aren't playing the game the right way. They don't get it. More than likely not going to be a dream client. You can overcome that objection. Separate topic, but it's certainly possible. Okay, so that is the second way to do it, which is hourly. Now, the third is a little bit of a blend of the first two. And this is a very common technique as well. They don't use menu. They don't necessarily do hourly. They do a little bit of a probe to understand what they've got going on. And then in the back of your mind, you do sort of just a calculation. You go, okay, based on the information you gave me, I think it'll take me this many hours. And so you give sort of a flat price that is an estimate or a guesstimate based on the complexity. Now, the problem with this is that we all know that most clients do not know the complexity of their work. And sometimes we don't ask all the questions. And so it's very easy to get burned on the back end of this type of pricing strategy where it's like, it's not systemized at all. It's more of just like a gut feeling and what you think it'll take. And it doesn't really account for any sort of surprise. Oh, they forgot to tell you that they sold that. They said they have they said that they have a business, but they didn't say that it was a holding company and that it actually has 6 LLCs with 4 partners each and under them, right? Like you're like, they forgot to mention that because you didn't ask specifically what type of business it was. And now all of a sudden you're in this weird situation of, do I dramatically increase the price? Do I just eat it? Is it my fault? It's like this weird guilt thing. You can totally avoid all of this, okay? I'm going to explain how in a little bit. So again, I don't like that. Third one, sort of that hybrid approach, blending the first two of menu and hourly. Just avoid that one entirely. Fourth one is flat billing. And I also do not like flat billing. And so flat billing is essentially just, you come to me and if you are this thing, it's this price. Like I've got 2 prices or I've got 1 price and it's $1,500 no matter who you are, what you do, what you got going on. Flat billing or flat pricing does not account for the complexity associated and you lose more sales. It's convenient for you, but it is not in the best interest of the buyer. And I think there's much better ways to do it. So again, I'm not a proponent of flat billing in general. I think it's just kind of a way to like throw your hands up in the air as opposed to a much, much better way to do it. Fifth one is value pricing. Okay. Value pricing is by far the best way to do any sort of pricing. Now, the problem with value pricing is most people don't know how to do it because they second guess their own worth. They don't know what goes into the creation of value, and they don't know how to express the value to the prospective client. So let me go back to my example of Randy and Deva, who have a minimum of $1,500 for any return that they touch. The reason that they can do that is because their value is inherently higher than every other accountant / tax filer that they will talk to. The reason that is true is because they have a depth of expertise in a field of tax filing that most people either barely do, don't do well, or don't do at all. And so when you go to where the market is not, and you develop a reputation and expertise, people will come to you with a more complex problem, right? The more complex of a problem you solve, the higher price you get paid, period, right? Like that is what value is. If it's complex and it's hard, people will pay you more. Now, the thing is, it's usually only hard in the beginning, because what happens is the longer you do anything, the better and better and better you get at it, which means the easier and more profitable and faster you can do it. But what happens is you take this for granted. I know it for a fact. This is all I do is talk to you guys all day. You take your own superpowers and expertise for granted. And when you do that, you think you should charge less. You look at the average and you feel bad that you're above them, instead of feeling proud that you deserve to be paid more for your expertise and the fact that you've made strong strategic business decisions by saying no to the 70 million people out there who need tax filing, but you're only talking to the 70 that actually need your level of expertise. This is what I mean when I say value billing. Value is always a synonym for results. If you work with a specific type of person and you do a specific type of return, your result is higher. Why is your result higher? You can get it done faster, more accurately, with less overall mistakes and problems. That is the things that entrepreneurs hate are mistakes and redoing things that have already been done, period. I hate that. Everyone hates that. Everyone on this call is more than likely an entrepreneur. So if you know that, and it's like, well, how do I deliver the most value? You go, well, how do I make sure that it's a higher level of result, consistently done the way people want it to, done quickly and appreciated? When these things line up, price is less of a concern. I would argue it's of course, it's still going to matter. You're not going to be able to say it's like $50,000 for a tax return unless it's like super, super, super crazy. But now you've got a much better strategy to be able to price from. So that's the fifth one. And then the last one, and I want to be, this was a question that came in from Marlon, and I appreciate it. Questions related to subscriptions for accounting services, or excuse me, tax filing services. I personally, and I consult and have seen a lot of businesses, I have not seen a successful tax subscription service, but you've got to think about it in a slightly different way. You are a subscription service. It's just your subscription renews every year. You just don't get paid every month on it. You get paid a larger sum each year. One of my favorite expressions in business is not, is your business recurring? It's how recurring is it? And so if you go, well, my business is recurring, it's just it recurs every year, but I'd like it to be more recurring, you have to create a value proposition that people will be happy to pay for every month. Now, the obvious one is always going to be related to bookkeeping, financials, quarterly taxes, right? Payroll. Those are things that have to be done every week or every month. But to create a tax-related subscription is very difficult. But you can increase the likelihood that they come back to you year over year by including services that occur outside of tax season. So for instance, just to use Deva and Randy again, because I think they're such a great example of how to do this the right way. when you charge a premium price, you're still expected to deliver a premium service. Like, let's just be real, right? Like that's how these things work. So when they charge a premium price, it's not just we're going to file a return. It's they do a very intense sort of intake, right? They do a very, they have a white glove experience for the filing of the return. They use great technology for them to walk through the return once it's ready for review from the client. But they also do, I believe, and they've changed a few times because, as you grow and change, you want to kind of pull back on certain levels of service. You realize they may not be being utilized by clients. They may be getting stacked too much, but they would do quarterly tax planning calls. So you might go to you might have a quarterly, not quarterly, but you might do once every 6 months, you do a tax planning call with your clients. And what's great about that is you're still billing and getting paid for it upfront. So you're not chasing down any AR. You're not doing any of you're not trying to be like, you got to pay me every month, but we're only going to talk to you in 6 months and once during tax season. Like, it's such a hard thing to justify when I see my bank balance and I'm like, I'm getting dinged every month for this, and I'm not experiencing the benefit of it every month. So instead, get paid the premium price up front, still deliver the service to increase the likelihood that they come back to you. So that to me is by far the best way to do it. And I think you've done a great job also of a second question here, which is, what happens when their situation changes from year to year? Well, one, I want your price to be significant enough that the variance should not matter that much, right? Like, if we were to really take a look at the data from the NSA, I didn't promise I didn't hack into the NSA to get that. If we take a look at that data and we go, okay, the averages for most of these extensions, for some of these additional forms, they're not that much money. And I'm not saying like, just don't, if someone dumps all this work on you from year to year, like, don't charge for it. I'm not saying that at all. What I am saying is, if there is a large enough profit from the initial price that you charge, you don't need to probably have that conversation if it's one of these smaller items. Now, if it's a larger item, it might be outside the scope of one of the packages, right? Like, if someone drops, you said a 1031 exchange, right? Pretty sizable. Someone drops a 1031, you might say, look, 1031s are not covered under this engagement. You're now on the $2,500 plan per year. But not only are we going to take care of the 1031, we're also going to be able to, and then you can fill in the gap with an additional benefit. So, there are a lot of additional benefits out there. You can reference, some people do like IRS notice alerts, right? We can be your, what's the word? Not watchdog. That's not the right word. We can be your, I can't think of the word. We used to do it in our firm and I can't believe I can't remember it. Yeah, okay, got that built in already. But again, it's like, if it's built in already, that's fantastic. Thank you for helping me out here. But the point is if you pull it out, now you can stack it into a higher package, right? Like, you got to be clear about who gets what, where, and that allows you to be able to say, hey, when you have this level of complexity, this is what we have to do. This is the price that it has to be at. Okay, and then I have another question here is, do you give an estimate price and stick with it, or give a 10% swing? So no, I don't do swings. I don't do ranges. I give a price, and my responsibility as the entrepreneur, right, as the owner, as the salesperson, is to make sure that the price has enough profit to account for any swing, and that I'd still be happy for it. Right? Like, I don't like to go back to people and be like, well, it's actually 10% cheaper, or hey, actually it's 10% more. I'd rather just quote the 10% more and make sure that they know that they're getting expertise associated with that, as opposed to like, oh, I'm not so sure. Like, people buy certainty. And the one thing that you never want to express during a sales opportunity is a lack of certainty. It'd be like, well, I think it's going to be around about this. It's like, so how much is it going to be? It's like, well, it might be significantly more. It's like, how much more? It's like, well, I just want to avoid that in its entirety. It'll kill deals. And look, you want the incentive to be efficient and effective. If you know that you can go back and kind of rearrange the price, you don't have the same incentive you do to be efficient, right? It's the same thing of like, why would I want to agree to hourly? It incentivizes me to work slower, to make more money. If I create efficiencies in my business for how the return is done, for how the review process is done, I incorporate Loom, I invested in my workflow software, I've got someone to do the vast majority of the grunt work of collecting the information, cool. All your costs are significantly lower now and you're still charging $1,500. What difference would 10% make? It wouldn't make any difference whatsoever. So great question, Royu. I got a question from Daniel as well. How to price clients who are individuals, no businesses, who have rental and or foreign income? Great question. So one, I always just go back to like, if this does not align with your dream client profile, you probably shouldn't be saying yes to it unless you really need revenue. Like if it's just like, unless you're like, Tyler, I want people without businesses who have foreign income and occasionally have a rental. Like if you're saying that's your dream client, be like, beautiful, let's build a pricing strategy to fit them. But if this is one-off situations that are eating up your time and you realize they're not profitable, that they have a bunch of problems, it's so much better, both in the short term and the long term, to just say, no, thank you. Like, this has been great. This isn't really what I do. I have someone who really specializes in W2 earners, right? Like they're going to be able to help you. And then you get to take and win back the time of thinking about this, dealing with the person themselves. And you're only losing at max, a couple $1,000s, like even if you have a couple of these clients. But if I were to price them, to be clear, this to me is when you want to make sure that you have what I would refer to is, especially if you're doing business clients primarily. If you've got business clients primarily, you want to set a basement floor price for any tax return that comes your way. And that way, even when you've got these little additional things that kind of crop up into your sphere, you go, all right, we can help you, but it's $1,200. Now you give them the ability to come in and still work with you, and you go, well, I'm not working for pennies on this. We've got a good margin. It's not that complicated, but you don't have to go and create a menu for it. You don't have to go and create like all these complex things that are associated with it. It's just like, if they can get to that minimum and make it worth their time, cool. If they don't want to do it, they'll go work with someone else. But that to me is generally speaking the way that I believe is the best way to approach those sort of one-off scenarios that take away from working with your dream clients. Like just set a high minimum or say no. Okay, but honestly, like that's how you price tax returns. And just to summarize, there's only a couple of ways to do it. And really, there's only one really good way to do it. So first way that I don't recommend you do is menu pricing. I know that's what a lot of people do. And if you want to go to menu pricing, there's plenty of data out there. Main thing is don't go below the averages. Please pull the profession up higher. Go above it. Most people do not have a firm you want to emulate, unfortunately. They don't have a dream firm. They kind of have a nightmare firm. And that's because they are being the average or below the average. You want to be above the average. Second part is hourly. And that is just a way of saying, I'm not sure. I'd like to incentivize you to make me work slower. Avoid that. There's no reason to do it. Hourly is just another way of saying like, I wish I would rather go get another job right now. You can avoid that. Don't need to do it. Only exception for hourly is if you've got some sort of one-off project that for some reason you want to take and don't know how to price, you can start with an hourly, but I would still avoid it at pretty much all costs. Third is a hybrid approach of the two, which is very common, which is I've been doing this for a while. I know approximately how much this takes. I know how much I usually typically want to have as a margin for this. And so you kind of think you have a pricing system, you kind of think it's value, but really it's just based in your historical appreciation of the work you've done, which is usually undervalued. And it's a combination of just time and billing, which is again, just another way of saying hourly. Fourth is what is known as fixed, or excuse me, just flat rate, which is, when you come in, I don't care if you've got the most complex tax return in the world, it's $800. And you're like, well, that's great because now W-2 people are paying me $800, but you're really leaving a lot of meat on the bone. And honestly, you're just not having a smart pricing strategy in general because it's just, flat doesn't work. It's to the benefit of the owner. It's never to the benefit of the consumer. Fourth is known as value, right? Fifth is known as value billing. And value billing to me is by far the most advantageous of what you can do. And if you want to increase value, there is a fantastic book that I cannot recommend enough. We cover it at length in our program, $100 million offers. If you're remotely ambiguous about what value means, if you're like, I don't know, what is value? There is a specific section in this book that is known as the value equation formula or value formula, and it breaks down all of the components that go into creating value. It is exceptionally useful, and that is one of the ways that you can help yourself to get further into value billing. But if I were to summarize what that really means, you've got a specific person. You can help them at a higher level because you solve a specific problem, you charge a premium price, and you get them to their dream destination faster with less pain, sacrifice involved. It's really as simple as that. Okay, so thank you so much for your time. I hope you can price your tax returns above the average, significantly above it. And if you need any help with that, you know that's what we do. My name is Tyler S. Clark. Thank you so much for your most precious resource. Remember that only you can create your dream firm, but we are here to help you every single step of the way. Have a fantastic rest of your workday and talk to you all very, very soon. And for those of you coming to France next week, can't wait to see you.